Our next panel discussion is Rethinking Corporate Financial Products for New Age Startups. This will be moderated by Mr. Shashwat Sharma, who is the Senior Partner and Financial Service Leader at Kearney Consulting. May we request Mr. Sharma to please come on stage, please. Thank you. The topic for our next panel discussion is Rethinking Corporate Financial Products for New Age Startups, and which will be moderated by Mr. Shashwat Sharma, Senior Partner and Financial Service Leader, Kearney Consulting. He'll be joined by Deepti, Sanghi, CEO and founder of Kodo. Welcome, Deepti. With Zeus, Dhanbhura, who is the founder and CEO of BridgeUp, and Vaibhav Tambe, co-founder and CEO, TransBnk Solution Private Limited. May I ask Shashwat to take it from here, please?
Thank you so much. So great, and so great to have be the moderator on a panel which has 3 startup founders, and I realize, at least I'm happy to see Vaibhav dressed a bit like me, in the sense at least he's also wearing a tie.
Ex-banker.
Yeah, but anyways, but no, great to be on this panel with. Something wrong with the mic? Okay. Yeah. So are we all audible in the back? Yeah, perfect. Okay. So, first of all, let's welcome the panel. As we have Deepti, Zeus, and Vaibhav. And I think it's a very interesting topic in terms of rethinking the corporate solutions products for new age startups. What I find quite interesting is new age. So we're already making that distinction between, do the new age companies need something which is very different and unique compared to what we have from some of the more established mainstream companies. So that's really what we have to discuss. Let me start by asking each of the panelists in terms of what's really been their journey, what made them take the plunge. As I understand, all of you had stable, steady corporate jobs and were doing really well in your career. So what made you all take the plunge and really join, and what's really the difference or you are actually making in the space? So let's start with Deepti, you.
Hi, everybody. So my journey started with a conversation with a few of my friends who run their startups, who are very strong product and marketing folks, but are scared of finance. Given my background in banking, I was like the finance friend. And I could see that pattern across. And I said, hey, what if I could be that finance friend at scale for a lot of startups? And I looked around and I saw that in companies, when it comes to work tools, teams which are in engineering, design, marketing, they've been given Ferraris, but the finance teams are still pulling cycle rickshaws. And I was like, that needs to be fixed. And that's how we started Kodo. So Kodo is a spend management platform for fast-growing startups. We offer all kinds of form factors for B2B payments, be it cards, bank transfers, bulk payments, QR payments, and for all kinds of business spends, be it for IT and marketing spends, vendor payments, or for utility and tax payments, or employee payroll and reimbursement. To put it simply, we are a spend gateway. So whenever a company has to spend money, they can do that through Kodo.
Thanks, Deepti. Zeus?
Yeah. Hi, everybody. Thanks for the introduction, Shashwat. So when I actually started my career, it was in law in 2012. Graduated as a lawyer. My co-founder was also actually a lawyer. And being exposed to law at an early age, we saw how the financial and other worlds would work. I mean, what we really realized is that being in this space, there was a lot of opportunity in order to create alternative financial products. It wasn't always being pushed in the right way, or it wasn't always being, the needs of the market weren't really being tendered to. Legacy financial institutions were providing debt products or other alternative solutions, but I would say what really pushed me personally to get into this is to become more independent for my own time. Being from a legal background, you don't own your time, you practically don't own your life. So it was necessary to be able to change it up, not only for myself, but for a lot of other people, I would say. And that's where being in the financial sector, I think, really gave us the push. I mean, any other banker will obviously relate to the hours. So I'll say that that was one thing. You assume that you're going to come into a space where the hours might be less or in your control. It's actually much worse. But yeah, being in the fintech space, I think, is the opportunity of the time. And that's what really pushed us into starting it.
Yeah, thanks. First of all, I think so great to see you all, because especially the sumptuous food is there, and still there are a lot of guys looking forward to. So I think I again a career banker, and probably what we have seen in last few years, a lot of thrust thanks to NPCI and thanks to RBI and Government of India on the innovations around entire banking suite. And I think last role I was working as a country head for IndusInd Bank, and we saw a lot of gaps in the B2B side of the payments. While B2C, you can say it's on the maturity curve. Again, many thanks to NPCI for that. But what we could see, a lot of gaps in B2B payment side, which could be addressed as a group of bankers. There were some solutions where we used to work very closely with 4 or 5 banks, but it never used to happen. And that's what me and a couple of my colleagues from bank, we thought of, hey, let's look at, addressing this space. And we got a good amount of support from our large institutional clients, banks, and I think good start. I was just having chat with Zeus on that. So I think good start on that, and probably look forward to, meeting a lot of you guys and, looking at solving more and more B2B problems. And I am so thankful to the team. The topic actually suits exactly, probably all 3 of us, we can relate it to the topic, because we actually are rethinking the corporate financial products, and obviously being the newest startup. I think that's about me.
Very interesting. So Vaibhav, let me just build on your answer, because I think you touched upon a very important point about saying that while on the retail side, we've seen a lot of disruption and a lot of also adoption. Also, a lot of people say that the adoption has also been driven by the absence of any MDRs, right? I mean, on the retail side, and that's been a huge thing. Now, on the corporate side, and like you said, you've been one of the newest startups, but is COVID the only moment of truth, or is there anything else also which you think, which is making the corporates really adopt? And when I say corporates, let's focus more on the mid-size and the SMEs, because obviously the large corporates were always more open to payments on the B2B side. But anything specific you think from your experience in terms of how you are seeing this evolve and change beyond just the impact of COVID?
I think probably 2 different vectors we spoke about. One was COVID, and second was the corporate or startups, the way they look at various aspects of the business, right? So I think COVID, obviously, each one of us, we've seen through. But I think if we have seen the hue and cry as an individual, whatever, cash, name, mil raha, etc., you should have, I used to have, me and my team used to manage around 1,500 odd corporates, and there was a lot of pain. Obviously, not because they were not digitized and all, but obviously they were, it just stuck. It just stuck a lot of startups, a lot of MSMEs to, say, probably a medical shop guy or a kirana shop guy, who's actually running his business based on the footfalls, and this footfalls are over. Some regulatory changes, banks are allowed to operate, but the financial inclusion partners. So there are a lot of things happening around us, and that really, we really saw that, yes, COVID obviously is the turning point. From the B2B client's perspective or corporate perspective, I think most of the guys also have the challenge of addressing the legacy systems, right? So when you want to digitize, entire stack of yours, when you have a look at acquiring customer digitally, or maybe providing payment services to your clients or your suppliers digitally, you always have that legacy stack of yours, which cannot be transformed overnight. And that's what, again, was the infrastructure as a service or the payment or banking or lending infrastructure as a service could come up as a parallel track. So just to summarize, yeah, I mean, unfortunately, it was not a great thing, but yeah, it helped us to probably accelerate our thinking, our processes, our products by probably 5 years.
Sure. So, Deepti, let me request you to add from your experience in terms of, we talked about emerging solutions. So do you think specifically also for the, while I know you focus both on the old economy and the new age companies, but from a new age company perspective, are there specific innovations or solutions which you think are really emerging fast?
Yeah, I mean, as a fast-growing startup, we understand the gaps in the current corporate financial products really well. And we are building the tools to serve similar companies that are growing very rapidly. So when a company starts scaling up, one of the things that happens is the spends spiral out of control. And there is a strong need to have a unified view of all the spends across teams, departments, locations. And traditionally, in the absence of any strong tools, all of this kind of gets centralized to the finance teams. And they create these complex manual workflows and bureaucracy to keep control on those spends. And for those teams, this is a thankless, repetitive, and kind of soul-sucking part of their work. So what we are building is modern tools to help the finance teams have complete control over the spends, as well as give flexibility to the teams, like the non-finance business teams, to make business-critical spends in a timely manner without any bureaucracy. And what we are providing is, through our tools, 3 things: compliance, collaboration, and cost control. So traditionally, the banks offer great financial instruments, payment instruments, but they don't have the tools for compliance and collaboration. The traditional ERP systems take months to deploy and are very expensive. So we offer the best of both worlds, where we offer a completely customizable platform where you can work with the best financial products to manage the company-wide spends in an easy way. So, and we have companies like Grow, Mensa Brands, Zepto, FamPay, even Mahindra Logistics, who are our customers amongst more than 1,500 companies that have come on board to use our platform.
Great, thanks. I think one thing which Zeus, in fact, I was having a very interesting conversation with Zeus, and one of the things he's really trying to solve for is the entire lending problem statement of clients. And obviously for new age startups, sometimes debt and equity boundaries get blurred, but obviously you're trying to create new propositions in a space which is right now more seems either traditional term loans or some kind of working capital business loans, but we're trying to create a new space for more for even the startup economy, where, like I said, and you also saying that debt equity boundaries can get blurred. With that kind of thinking, do you see a lot more innovation would come in that space, while you are obviously still working with a little bit more traditional bank and MBSE partners, but how do you see really openness to innovate, think through new financing solutions, especially in an era where growth capital and equity capital in the startup world is at least seeing some signs of drying up?
Right, thanks, Shashwat. So yes, that is the space that we are building, and not only in today's time, even before COVID or after COVID or the financial slowdown or the winter, as it's synonymously called, access to capital has always been hard. Access to non-dilutive capital, debt capital, whatever you want to call it, has been equally harder. Large amounts of capital for smaller companies in a non-dilutive fashion across different instruments or debt products is not easy to access. Legacy financial institutions on their behalf do try to solve that. But modern age assessment techniques using technology in order to scale is still very, very slow in that regard. There are some NBFCs which work with do a fantastic job of it. Bajaj Finance being one of them, obviously the obvious leader in the market, will be giving you a product or a solution for a sub 25 lakh category in under a day. I'm talking about ticket sizes. Larger ticket sizes need a mixture of both qualitative and quantitative assessment. So you are trying to create the technology which allows existing lenders to come onto your platform, see the companies that you've originated, see the assessment that you've taken care of, personalize it to a large extent, and quickly disburse the capital. In today's world, or at least in today's India, the player who manages that at scale has a huge market to address. Non-dilutive capital, debt capital, invoice discounting, supply chain financing, whatever the instrument, recurring revenue financing. The end, I would say, asset is the receivable. You are trying to assess the quality of the nature, quality and nature of the receivable. And I would say that modern lending platforms like us are trying to build in that space to try and provide capital faster and cheaper. India being a price-sensitive market, cheaper is where I would strongly stress. And the way to get that is actually by working hand in hand with banks. Get them onto your cap table in order to get finance at a lower rate so that you can lend it out at a faster and lower rate, right? I mean, that is the way I would say that we are working. But you can't do it in a silo. You can't even expect to, even with foreign capital being infused. You need to be able to work hand in hand with banks also. So yeah, that's my.
Thanks for that. Just building on some of the key challenges which the startup economy is seeing, and also especially some of the clients are seeing. What we do as Kearney, we actually have what we call the Kearney B2B index, where we actually look at different countries' evolution, and we look at two major metrics. One is on their digital penetration in the B2B space, and the second is around efficiency, which is not just about the payment, but the entire end-to-end process. So what we've seen is that while some components of the value chain, so very, very interestingly, I think I was talking to someone and they said, you know, guys, in Southeast Asia, look up to India on penetration, and my answer was that yes, but we look up to them on efficiency. So somewhere we've got the penetration better, but not the efficiency, and vice versa. So in that context, how do you really see when you work with your clients? One, for example, you were talking about financial processes, vendor payments, etc. So while the payment can happen in microseconds or even less, but then there's a process around it, the invoice. So how is that changing? Because till that also starts getting a lot more digitized. The end-to-end process will obviously, one part will be solved, but how do you look at the end-to-end work, and how are both your banking partners and also your other corporate partners, SME partners, how are they thinking about the end-to-end view rather than just a payment view?
Okay, so I see there are two things that have happened in the last few years that have really accelerated this end-to-end connectivity across the value chains. One is the implementation of GST, which has brought all the businesses, they're so intricately connected. I mean, any payment would have the right trails going through. So that's been a strong force factor in creating that end-to-end connectivity across the supply chains. The second thing that's happened is the use of UPI for our personal payments. We are so used, especially in the last 2 years of COVID, we are in our personal retail use, we can't think, I mean, of course there are cards, but UPI has become the de facto thing for acceptance of payments as well as for paying. And people are expecting the same kind of digitization and seamlessness for their business spends as well. Right? So with these two factors in terms of their user behavior, which first started with the consumers, and then it's going into the business side, and the first where it's the regulatory structural thing around GST, these things are helping that penetration across the supply chain for businesses, for payments, to bring it all in a digital fashion and streamline that. Does that answer your question?
Absolutely. Yeah. You want to add anything to that? Or? Okay. So yeah.
Perfectly answered.
Sorry, holding the mic up. Sorry. So I think just building on some of the challenges which I think each of you have been alluding to. So Vaibhav, you were talking about, you have obviously, like you said, come from a banking world where you were working with more than 1,000 clients, yeah. and obviously you understand the problem statements right from the large corporates to the mid corporate. So if you were to, and I'm not, a lot of it you are doing yourself, but if you were to give any tips to other peer startups or any other people looking at the space? We all say it's a huge ocean. There's so many SMEs who are still not in the organized spend category. So what would be, if you were to give, whatever you can reveal? I know there are a lot of people who are looking up to you, but if there were one or two tips which you want to really give to people to say, look, this is a white space, relatively unaddressed, go for it.
Honestly, this is a topic I'm sure everybody would look at, expanding their own horizons a lot. But probably, sticking to the corporate, financial product perspective, I think, like we've dealt with somebody like Reliance Industries also, and probably 1 crore turnover SME also, right? I think probably, be it a fintech, be it a bank, bankers, I think probably the approach earlier, or in fact right now also, used to be one size fits all. They used to build products for the masses. But I think probably with UPI kind of a product, or maybe there are several products like we spoke about. TransBnk does the products around escrows or power of attorney accounts. I think probably we have to understand, the one size fits all not going to really help you to scale up. We have to understand how exactly each and every organization, or at least each and every category, let's look at FMCG as one category, spends as one category, NBFCs as one category, and then obviously the solutions have to be customized. And that obviously comes to the core of your innovation. If you are a startup, you have to have the stack which is scalable, horizontally as well. Obviously, you can do vertical integrations and go on adding products. But I think you have to, and same goes with the bank. The way typically banks used to face challenges because of the legacy applications and legacy systems at their end, it becomes difficult for them to add the product layers on layers exactly on their infrastructure layer. And I think that's where probably a lot of infrastructure companies are coming into the play, and that's what I think we are aiming at, right?
So you haven't given any tips?
Yeah.
So the
first,
for a real tip.
yeah.
What you're saying is, look at the India stack, leverage
No,
that,
so I think that's what, so the first probably tip, I'm not really the expert at giving tip, but I think we have to look at, the target segment, go back to the basics and actually look what exactly, he is struggling for. I think that's probably is missing. We have to look at that, be it a startup, be it a fintech, be it an established player, or be it, any other entity. So you have to look at that. And second, obviously, 2 points I wanted to make. First point is obviously customize, try to keep the stack so that you can actually scale up while customizing. It's very difficult, but combination of both is very, very important. And the second part, obviously, when you look at the lending challenges, for example, do not look at the regulatorily arbitrages. That's one of the very, very common mistakes we've been seeing around, in the market. And I think we have seen enough actions, enough circulars. Do not look for the regulatory arbitrages. It's not going to solve your problem. Obviously guys like Kearney are there for consulting, but if it is not clear, speak to your banker. If you are a fintech, if you're a bank, speak to your compliance teams, but get the regulatory alignment absolutely right. Because today, or in 6 months, in 1 year, it's gonna affect your business. So build your business keeping in mind the exact regulatory and compliance structure, and that's actually probably these two things are at the core of our startup.
So I think Vaibhav was more about what not to do. Zeus, anything about what to do?
Yeah, from a what to do perspective, I would say that adding on to what Vaibhav said from a regulatory perspective, it's always hard to navigate this route, Regulation is not always post facto. You need to understand that at some point in time, you will be able to face it down the road, like how we are right now, having built business models which don't fit the current regulatory environment. So I would say in terms of what to do, well, this will be more from my legal background, but what you would like to do is sometimes take an opinion from a highly placed legal entity, maybe a consultancy, probably even the RBI. You can actually write to the RBI and SEBI. Many people don't actually know about that, and reach out to them and ask them what they think. And it could actually form a record on your books to say that, hey, this is my business model. I've reached out to you. They, in all probability, they might not respond, but a non-response is also helpful in some ways because it's not a no. outright. So yeah, from a what to do perspective, I would say that that might help in a limited fashion, but there can't be a clear answer. A lot of it is sometimes to be predicted. Maybe you can see the hints that the RBI throws down, like, right? You can see where they were going with FLDG for a while now. You could maybe try to avoid that route, but that's just one example. Not everybody can. So, right.
Any thoughts from you, Deepti, on what to do? I think we've heard a lot of things about the compliance and regulation,
Yeah.
but any idea which you want to throw that, look, this is a white space, go build a new business?
Well, in terms of what to do in white spaces, I would say that when it comes to financial products for businesses, there is a lot of friction out there. So, you just pick up any major point of friction and you can go ahead and solve for that. We often talk about product market fit, but there is something called a founder market fit as well. So when looking for problems to solve, it's very important to understand if you can empathize with the end customer and really kind of understand the pain that they are going through. Because at the end of the day, when you're building something and you're trying to honestly serve your customers, it is important to have that insight and that empathy to change that pain to delight. So that's why picking the problem that you can empathize with yourself deeply is, I think, super important. In terms of white spaces, there is a lot of opportunity in India. There are a lot of things that need to be fixed. And yeah, this is a great time to be building.
Great. So I think we've heard there's lots to be done and lots of white space. But if you were to look at the fintech world, which is serving the startups or the corporates in that sense, what are some of their challenges? And let's also perhaps think a bit about that. I think one challenge which we, and I know a lot of the panelists talked about expectations on retail like UPI, but what we've seen is that somehow the traction is still more on the consumer retail side, be it of the investor community, the VC community, right? And even a lot more happening there. While I know all of us agree that B2B and SME is a big space, but somewhere the fintech's addressing more the consumer side. Again, it's all relative, tend to sometimes get more investor attention. Let me put it mildly like that. So in that context, any thoughts from your side in terms of what more do you think, and all of you focus more on obviously the B2B space, and I'm sure you obviously get a lot of investor attention, but if you were to tell someone who is entering this newly, who wants to be in the B2B rather than B2C or B2B2C, what would you advise them in terms of how would they attract the investors, or is that really a challenge for fintechs who are focused on B2B rather than B2C? Zeus, want to go for it? Or?
Yeah, sure. So you know what they say, in B2C are building for valuation, and B2B are building for revenue. But apart from that, I mean, obviously that's a joke, but when you're looking at concentrating on a space, you really want to see more than just the numbers. Now, what's happened, and the harsh reality of it is that if you are looking to scale via valuation, then the venture capitalists are going to ask you for metrics which don't really exist, because revenue as a metric is not going to be established in order to get you to a 3x, 4x multiple of your existing revenue within a 12 to 24 month period, which is what is expected. So you start building metrics which can actually be achieved. Number of users, number of amounts disbursed, everything which is not revenue, because that is exactly what is going to be able to build it. Now, while you are building up your valuation in the B2C space and you are taking on a lot more consumers, at some point now the question has changed. The question is, where is your path through revenue, then where is your path through profitability, right? So as a prudent founder, when you're entering the space, it's not really about chasing the venture capitalist. The right venture capitalist will chase you if your business fits. As was pointed out earlier, and rightly so, there is something called founder market fit, and there is also VC market fit. They are looking for you if you're building in the right space. For you, the real question is, what are you going to want? And what is going to be needed down the line? Is profitability going to be a serious question? In my opinion, it should be. We fund companies which are like that, so obviously I'm biased. But I would say that for a sustainable business model which is to be built across a 5-10 year period, it needs to be there. And in the B2B space, more and more companies are doing that. In the B2C space, because of India's per capita numbers, even though we've crossed the UK in terms of the GDP, we haven't in terms of per capita, we're far lower. So it is going to be a much more difficult route to profitability in the B2C than it is in the B2B. The real question is, what are your investors going to look for, and how much of your own valuation, how much of your own equity do you want to save in the next 5-6 years' time? So really a lot of things. We can have a different panel on this, but I would say to summarize, that is what my thoughts are.
Any other thoughts from the panelists, or we can go to the next question?
No, I think the only point probably he mentioned about the B2Bs for profitability. I think the only thing I would like to mention over here is when we look at B2B space, the go-to-market strategy or your customer LTV, these are two very important points. How do you assess them and how do you measure them, and then how do you make the most of it? That's very important. There's no cash burn over here, but those are two things which are typically ignored or maybe kind of ignored by startups or even corporates. I think we can look at that aspect.
Sure. And Deepti, I mean, and I'm sure you'll talk on behalf of the wider fraternity, but what are some of the challenges as a fintech which you face as you are scaling up? Obviously, you need to build bank partnerships, you need to reach out to corporates. Well, obviously that's on the business side, but also other challenges, people, internal processes. I mean, what keeps you awake or keeps your other peers awake?
Well, of course, building any startup, there are lots of things that keep you awake, and that's the challenge, right? You got to navigate the waters through all the difficulties that come across. One thing across the board is, of course, talent, right? Getting the right talent and getting them to, work at their peak to help them achieve their potential. I think that is something that's definitely, all the companies in the startup space are trying to figure out the right balance. I would say other things, as a fintech specifically, the challenges that are there for a platform like ours, we integrate with a lot of partners, so be it banking or NBFC partners or any kind of accounting software or ERPs, etc. So having, in India at least, a lot of work still needs to be done to standardize a lot of these integrations across different partners. Some of the Western economies have much more standard protocols, and I think we are headed there. With a lot of innovation happening around open banking, we are in that direction. But for now, that is something that still is something that we need to cross the chasm there. And I would say, the third thing is, of course, the regulatory landscape. And it's never a dull moment in fintech, especially the last year. There have been a lot of activity in new regulations coming into force. And I believe for the long term, this is definitely very good for the industry because now there is complete clarity of what should be done and what should not be done. So that gives a much more stable foundation for businesses to build and scale. In the short term, obviously, there is a little bit of flux where companies need to probably rethink some parts of their businesses. But I think overall, this is a very good time for anybody who wants to serve their customers with the best of finance and technology to be building right now.
Great, thanks. I think just building on your last point around the entire the regulatory piece, and also I would say the broader policy making, how to increase that ambit. So, Vaibhav, I know you were also talking earlier about the infrastructure and how you can leverage. Now, there's lots being done at the India stack infrastructure level, open digital commerce network, new standards coming on OCEN. So how do you really see at one level a lot of work being done at the infrastructure level? So this entire PPP or the public-private partnership, while you've seen a lot more happening on the consumer side, but hopefully hearing from all of you, I also believe that will happen a lot more also now on the B2B side. But what do you think, what more would you, let's say, demand on behalf of the industry? What more infrastructure should be created beyond, obviously, the open digital commerce network and all?
I think
what do you demand?
probably, again, to split your question in two, probably people over here, bankers over here, we've been hearing so much about, account aggregator, ONDC, OCE, and, fantastic stack we've been building as a country. Before session, we had a chat with UIDI, something they are coming up with. But the real challenge probably is to look at, is the market really ready? I mean, when you talk about PSU banks, when you're forcing them, boss, 31st July ke pehle live jao, are they ready? I just started with the legacy system discussion. There have to be more and more players, and I know, a couple of players in the market who are the, infrastructure players who should help these banks, regulated entities, PPI entities to build this stack. It's very important for India. And I know Mobileware, Satyajit, Amitabh, they're building this stack for some of the other entities. We are building for a couple of products. So I think the real need is when these stacks are being built, there has to be somebody who will handhold the legacy systems of banks / NBFCs / PPI guys and then bring them onto the platform. Otherwise, UPI, it took so much time, but now look at UPI, how it is, it's beautiful. It's the entire world is looking at us. So we need a lot of such players, I'd be happy if it be limited periods like us, players like us, but we would need to have a lot of such players who translate. Let's say it's French to English translator. We need that. Otherwise, it's really difficult. You can't just keep on sending letters, BBPS pe live chale jao, But is it so easy for NBFC to build that entire layer? It's not very simple. Builders have done wonderful job for so many years, 25 years, their product have matured. Suddenly you ask these NBFCs and all the microfinance companies to build this product. It's not going to happen, right? So the idea is there has to be more and more infrastructure players, probably offer the product as a SaaS instead of, because you don't know whether it's going to click or not, right? ONDC, there's a lot of hype. You don't know whether it's going to really click for that. Account aggregator. People are, and rightly so, large banks are not very happy about it. Rightly so, because probably they are saying that, we today own the data. It's going to be democratized. So I think more and more fintech infrastructure players or more and more players would be there. And second thing, again, from the regulatory perspective, when they look at licensing regime, probably we can also have some empanelment or some listing where these players get some visibility vis-a-vis the today's player who are going to offer the stack as a tech stack.
Would you like to say anything, Deepti?
I think well summarized, yeah. And I think that's where the opportunity is, right? So
I think the way Deepti is building the wealth stack and he's building lending stack, we are building payment stack for B2B, that's the need. And I wish more and more players would come out. I actually don't wish that because there will be competition for all of us. But yeah, I mean, we should wish for more and more players.
Yeah, it's like you were giving ideas to your competitors.
That's
okay,
absolutely okay.
Just go and
We've been giving these ideas to the market when we were bankers, right?
Yeah.
But there were very few people who could actually capitalize on that because you require a lot of patience to build this kind of business. You require a hell lot of time to actually understand the technology, first of all, what NBCI is trying to say or what Protein is trying to say when they're talking about ONDC. It's very easy to take these terms. But when you're actually building a stack, 800 test cases for UPI, it's very difficult.
You got to make the elephants dance.
Yeah, exactly.
Yeah. No, I think we've had a great discussion, and at least for me, I feel a lot of energized with the energy on the panel and new ideas emerging. Also, in terms of how they're really looking towards disruption, but also very importantly, a lot of optimism that things would change, and yet definitely with the infrastructure coming, so they are themselves being the change. Like you said, building infrastructure because things didn't happen at the pace which you thought it would happen. I know we are out of time, but if there's any audience question, happy to take a couple. Otherwise, I know a lot of you have not had lunch, or some have had early lunch, but happy to take.
I think we are lucky that we're not going to have too many questions because everybody's hungry over there. But yeah, most welcome.
Any questions from the audience? I'm happy to take a couple. You have these young entrepreneurs trying to disrupt the B2B space, and yeah. Any more challenges for them? Any more thoughts you want to share? Now, I'm sure you can have, yeah.
No, I think probably we were self-explanatory, I think.
Good, so I think with that, I think I'll close the panel discussion. Thank you so much. I know we had a good audience. When I first saw the room, I thought it was very big, but I know with the social distancing, we've got a good full house with all the COVID norms in place. But thanks for being here. and really look forward to interacting with some of you doing sessions. Thanks.
Thanks everyone. Thanks.